Good morning, and thank you for joining us. Today is Thursday, April 30th. My name is Marty Brainerd, and I will be your host. I'd like to begin by acknowledging and thanking all of our clients who are healthcare workers. Thank you for all that you are doing during these uncertain times. Our call today will be on the topics of the current political landscape, ramifications given COVID-19, and the road to the 2020 election. We are joined by our partners from Strategas, Dan Clifton and Aaron Long. The format for today's call will be a brief introduction by Aaron Long, followed by prepared remarks from Dan Clifton. I will then ask Dan a few questions that we have received from clients and close the call. Unfortunately, we are unable to open the lines for a live Q&A session. With that, I will turn it over to Aaron and Dan.
Well, thanks so much, Marty. This is Aaron Long, and I'm the head of sales at Strategas Research. I want to thank Porter, Marty, and the entire team at Westwood for giving us the opportunity to participate on today's call and for the opportunity to partner with them these past 13 years. It means a tremendous amount to everyone here at Strategas. For those of you on the call who may not be familiar with Strategas, we're the top-ranked macro equity research firm on Wall Street. We publish research on investment strategy, economics, public policy, fixed income strategy, and technical research, just to name a few areas of our focus. Currently, we have just over 50 employees in our New York City and Washington, D.C. offices. We service clients in 26 countries globally and in 45 states here in the U.S. While I realize that everyone had the opportunity to see Dan's bio in the invitation that went out, but one thing that I like to highlight, in addition to being the top-ranked policy analyst on Wall Street, prior to his work at Strategas, he was also one of the lead lobbyists for the 2003 Tax Cuts on Dividends and Capital Gains and the 2004 Repatriation Tax Holiday, which I thank him for regularly. For those who've attended previous Westwood events, you've probably had the opportunity to see Dan at several of the past presidential election presentations, each election cycle in October. So without further delay, Dan, I'd like to turn the call over to you.
Well, great. Thank you, Aaron, and thank you, Westwood. I want to thank everybody on the call. It's so much more exciting when we can do this in person, and we can do it closer to the election when the excitement is high. But this is the situation we're in, and I think this call is extremely timely. I go back to the month of February. If you remember, in February, we were at the height of the Democratic primary. I've been involved in politics for 25 years, and I have never seen so much excitement from institutional investors and even people involved in politics around the 2020 election. It was, I think some people were worried about where we were going as a country, but there was a general excitement about the race itself, and to watch it completely disappear for understandable reasons with the coronavirus. It seems like we've almost taken a 2-month break since Super Tuesday as the country has to focus on what's really important, and that's the health and safety of our country. What we are starting to see is that as the virus begins to wane, as the states begin to reopen, and as the economy begins to heal, we're starting to see a little bit more interest in the election, and I would argue that the election is going to have a very big impact over financial markets as we get into the second half of the year. So I thank you for being on this call, and I do want to caveat it with we're still a long way away from the election. In normal years, I'm generally of the view that events that happen in March and April are unlikely to really impact events in October and November and the election results. But I do believe that this event of coronavirus is such a large event, one for our health security, one for our economic security, and one for our political security, that it has upended the presidential race. I would argue it's upended a number of Senate races, and it will have an impact one way or another as we go forward. Before I talk about the election, I would just argue we are already seeing this on the policy landscape. We're starting to see a lot of discussion about bringing in our supply chains from outside the United States to make sure that our healthcare supply chain here is in the U.S. That debate is very similar to what happened to the U.S. after the OPEC oil embargo in the 70s or the 9/11 and the security response that we had afterwards. And that's why I give this a very large weighting to one of the larger political events that I've seen in my lifetime. And that's why I think it's going to impact the election overall. One very quick point that I'll make is that a common question I'm being asked from clients is, will there be an election in November? It's probably a good place to start. There is a lot of talk about a possible second wave of the coronavirus. And if that second wave develops in the fall time, it may impede our ability to have an election. I wouldn't say it's a very high probability that the election would get canceled, but in a normal year, I would say that's a 0% probability. Today, maybe a 10 or 15% probability. I'm still in the very low probability camp because of a couple of factors. The first is that the advancements that we have made as a country in the last 30 days with respect to the coronavirus has been pretty dramatic and actually very positive. We now have plenty of tests. We now have started antibody testing, which means that you can test to see if you've had it. We are starting to develop therapeutics that make it easier to live with. And we have figured out how to be able to test, respond, and be able to quarantine. And so my sense is that even if there is a second wave, it will be demographic-based, meaning older Americans. It will be regional-based. We may have to shut down Detroit for 2 weeks, but we probably are not going to have to shut down the country. And when I say Detroit, I don't have any specific evidence. I was just giving you an example. Rather than having this national shutdown that what we're going through, it may be more isolated to a big city area if we have to get there. So I'm still very reasonably confident that we are going to have an election in November, and I just thought that would be a good place to start. Second place that I would start or discuss is the economy. If I presented on a presidential reelection, whether that's 2012 or 2004 or 1996, my presentation always started out with all we care about is what's happening in the U.S. economy. Because if the U.S. economy is doing reasonably better, a president can make the case to the American public that they have made their voters' standard of living better and they should win re-election. I just want to give you a couple of stats. The first stat is that no president in 100 years has won re-election if they had a recession 2 years before their re-election. No president has lost re-election if they avoided a recession 2 years before their re-election. And so what I argue is that if you want to get re-elected president, just avoid a recession. And the president looked like he was in a good place on that metric in January and February before the coronavirus happened. We are probably in a recession right now, for better or worse, and the president is going to have to go up against that headwind. Again, let me give you context to this. The unemployment rate, there have only been 2 presidents since we started collecting unemployment data. That's right after World War II. The 2 presidents that have had an increasing unemployment rate in their re-election year. That's Jimmy Carter in 1980 and George Herbert Walker Bush in 1992. They're the only 2 presidents to go on to lose re-election. And so the headwinds facing the president economically are pretty significant right now. He would have to overcome 100 years of data and really the common sense wisdom that people's lives are not going to be better off when they go to the polls. So the president needs what's called a V-shaped recovery. We've gone down one. Are we going to bounce up higher? And that's why you see the president putting significant stimulus into the U.S. economy as a way to avoid this. And in fact, the stimulus that we are doing is very different than the stimulus that we have done in the past. What do I mean by that? Well, we knew that unemployment was going to go up. And so we created a stimulus that would designed to replace that lost income. If you're working at American Airlines in Dallas, We've provided $25 billion for the airlines not to lay off those workers. We've provided enhanced unemployment insurance with the idea that this is a one-time temporary change in income, and as we bounce back, we can let those temporary programs run off. So you may not see that big drop in income that we have seen historically with recessions, and we just need to be mindful of that within the historical context that I've just laid out regarding the president going up against history in terms of this, in terms of his reelection. The market is giving the president a slight advantage to be able to win reelection. That is confounding a lot of political analysts here in Washington because the president's numbers have taken a severe hit in the last 3 weeks in all of the key swing states. We had viewed Florida as nearly locked up for the president's reelection a couple of months ago, and you've seen a sharp deterioration in the president's numbers in Florida. You've seen a sharp deterioration in the president's numbers in Michigan, Pennsylvania, and Arizona. That spells significant trouble for the president. This is not coming from me as a political analyst. This is the analysis the president's campaign staff presented to the president on Friday night. By the way, that meeting didn't go very well. The president did not really enjoy hearing that there's been a sharp, significant reduction in his numbers. There is a Democratic poll out today, so just take it with a grain of salt for all of you in Texas, that show that Biden is leading by 1 point in Texas. Now, I don't believe Joe Biden's going to win Texas, but if Joe Biden loses Texas by 3 or 4 points, that's going to signal that the president has trouble elsewhere. So the president is really, he's got a lot of ground to make up economically, and then those economic numbers have to translate into better political numbers. So why is the market giving Trump a 50-50 chance or a slightly better than 50-50 chance? And it's simply because Joe Biden is a terrible candidate for office. And I could say that with 44 years of history of watching his candidacy. And I don't say that in a negative way about Joe Biden, but the market is looking at the contest between the two and saying who could really win that debate between the two of them. The first point is that Joe Biden has some health issues that I think are apparent to folks. And so people are saying, okay, maybe he's not going to make it as the nominee. What we like to do is we like to look at the betting odds. The betting odds are where people make real money financial bets on outcomes. And despite having no opposition in the Democratic primary, Joe Biden has an 80% chance of being the Democratic nominee. In other words, the market is saying there's a 20% chance that Joe Biden will be replaced before the Democratic convention in August because of some of the issues that have arisen. One is obviously his health. It's a common theme that we hear among some Democrats, not all, some, is that they're worried about Biden having a health scare, same way Hillary Clinton did about 2 months before the 2016 election. You're also seeing new allegations being raised against the president. The third issue would be about China because of Joe Biden's long-standing relationship with China. Different world at that time, but really the vice president's son, Hunter, his relationship with the Chinese and the business that he does there. The president is going to make it a very big campaign issue. And I do know that on Tuesday, the president signed off on a new ad that will then expose that and be out on TV. And so that's why, despite this kind of historical headwind the president is facing economically due to the coronavirus, the market still has not completely downgraded the president at this point. It really comes down to whether Biden has the fire in the belly, as we like to say, in terms of what he can do. We're also going to see the president get very aggressive in ideas about what he wants to do ahead of the election. We're likely going to see the president put out a bold tax reform on the individual side with 2 income tax brackets, a bold infrastructure plan, and continue to push this America First theme, which really didn't gain traction with voters, but we're actually starting to see the concept actually starting to improve with voters after the coronavirus and some of the issues that would be associated with this. The key states that I would stay focused on as we start to look out to the election itself is the 3 that I think are critical from 2016, and that is Wisconsin, Michigan, and Pennsylvania. Donald Trump won those states by 77,000 votes combined. That's literally a football stadium on Sunday. That was his margin of victory. As I mentioned before, the president is doing bad in Michigan and Pennsylvania. He can lose those two states and still win Wisconsin and be the president, assuming he wins all the other states. So what are the other states that are also going to be in play? I would keep an eye on Florida, the very big one. I would keep an eye on Arizona. We're actually seeing some weakness amongst the Republicans in the Senate race in Arizona as well. And I would keep my eye on North Carolina, where some of the president's polling numbers have been weak itself. So the Democrats feel a little bit more emboldened that the map is working to their improvement heading into this election. But I like to argue we're still a long way away from the election itself. And those are the key areas that we would watch. Additionally, I would keep an eye on the Senate races. We think, let's just for argument's sake, just assume that the Democrats are going to win the White House this time. The market will begin to focus on the Senate race if they see that happening. And what I mean by that is that if the Democrats take over the House and the Senate and the White House, they will have the ability to pass legislation. And what the market is really worried about in that type of environment is tax increases, particularly changes to capital gains tax rates and to corporate income tax rates. The Democrats need to win 4 Senate seats. It's not very easy to do. They don't really have many states to be able to do it, and the Democrats are likely going to lose the Alabama seat that they own right now. So that means that if the Democrats are going to lose the Alabama seat, they're going to have to gain 5 other seats to get out that net 4. The key states to watch, as I mentioned earlier, Arizona, North Carolina, Maine, Colorado. There's probably going to be one more, possibly Georgia, that can get added to the mix. So you can see how tough that is. But if the president has a bad night, that window begins to open up, and that's going to be a major focus of the election. I want to give you just a couple of key events to watch. The first is that the president's approval rating is roughly the proxy for which he is going to get in his reelection bid. You could watch that daily. The president's approval rating today is about 45%. We think the president needs to get to about 48% to win the Electoral College. If he's over 48%, he's got a good shot at winning the popular vote, something he did not do in 2016. So just watching that approval rating, it's going to bake in everything that I just told you, I think is the key to watching the election, more so than the horse races. Second, I would watch those key states that I mentioned. The president can lose California 70-30, and that mixes up the national polling numbers. So I'd watch the state-by-state numbers, and in particular how he's doing in Wisconsin and Florida. They're going to tell you a lot. And then third, the stock market's going to tell us a lot more than the pundits in the polls. And I'm sure you've heard me say this before, but the S&P 500 has predicted every presidential election winner since 1984, and it's predicted 87% of the presidential election winners since 1928. So we have almost 100 years of data. And it's a very simple formula. If stocks are higher in the 3-month period before the election, the incumbent party has generally won. And if stocks are lower in that 3-month period, then the opposition party has won. Stocks were down about 3% in the 2016 election, a clear sign that the Democrats were in more trouble than the pundits in the polls had been suggesting. And so what that tells us is that the equity market, stocks, are going to start focusing really on being able to handicap this election starting around the first week of August. And we're going to be watching the stock market between August and the first week of November for any clues on how the market is pricing in this election overall. So between now and then, there's going to be a lot of twists and turns, things that we can talk about in Q&A, such as who's going to be vice president, how do you replace Biden as the nominee. But I'll stop there. I talked a few minutes longer than I wanted to, and I'll see if we have any questions that we can walk through these issues. Thanks.
Dan, thank you for those comments. This is Marty again. To your point, let's start with that. Who could be Biden's vice president?
Oh, okay, great. Thank you. So first, let me say that Joe Biden's made it a little bit easier for us to handicap this year because he has said, I am only going to have a woman as my vice president, right? So that allows us to now narrow down the population by half, or just about half, and say, who can this be? And I would look at a number of candidates for who Joe Biden can go with. The first, I would argue, is the consensus pick. I hate being consensus, but it makes logical sense, and that's Amy Klobuchar, senator from Minnesota, ran a pretty good Senate campaign, presidential campaign. We have always favored Klobuchar over the other candidates because she's so strong in the Midwest. Think about where Hillary was weak. Hillary was weak in the Midwest. The way Klobuchar runs in Minnesota, she wins Minnesota by an average of 26% in her Senate races. Trump lost Minnesota by 1 or 2% in 2016. So that kind of gives you a difference of who can you have running around in the Midwest campaigning for you. And I think she's very good there, and she's very good in not scaring suburban moms, which will be a key demographic in this election. So first, I would say that she would be placed in the top tier. The second is Kamala Harris. She's a senator from California. She ran in the presidential race. I think she's getting a lot of attention. She's got a very behind-the-scenes campaign going on that, and so that's a second person. As you start to go down the list, maybe these names are going to be a little bit less familiar, but ones that I would take very seriously. Third would be Tammy Duckworth. Tammy Duckworth is a senator from Illinois. She is a Iraq war veteran. She suffered some very significant war injuries. I would also look at Tammy Baldwin, the senator from Wisconsin. She's very close to the Bernie Sanders wing of the party, and she can win that key state of Wisconsin, a state that has supported Donald Trump and Scott Walker previously. Elizabeth Warren's name continues to get thrown around. I remain skeptical of Elizabeth Warren. She came in third place in the state of Massachusetts in the primary. She couldn't even win her home state. My thesis on politics is that voters who know you best, your home voters, if they're not voting for you, the rest of the country is going to take that cue from them. So I don't think that she's going to be the person, but she is very active in trying to make her case. Then I would look to other candidates who are less known, such as Val Demings from Orlando, former sheriff from Orlando, and was one of the impeachment managers. And then obviously you see the news about Stacey Abrams. She was an unsuccessful candidate for governor in Georgia, and she is making a very public case that she should be the vice president, probably more public than anything I have ever seen. So why this is important is for two reasons. I think there's a very high probability whoever is vice president for the Republican or the Democrat has a higher chance of being president within 4 years than any other time that I've seen in my lifetime. And I think a lot of people think on the Democratic side that Biden may just do one term and then hand it over to whoever's vice president. And second, if there is an issue with Biden, whether it's over his allegations against him regarding a former staffer or his health issues, the person who has been nominated as the vice president would have a better shot at being the replacement to Biden before the election. And so that's why we're taking this one a lot more seriously, the vice presidential race, than we have seen in the past before. Now, let me just make a quick comment about replacing Joe Biden. There was some talk about New York canceling its primary this week, and that leading to Joe Biden being the not getting such a number of delegates. From our understanding is that New York is going to award all of its delegates to Joe Biden because he is the only candidate in the race, and that will put him on a good path to being able to get a majority of delegates. If he is not going to be the nominee, they would have to vote on this at the convention. The convention has been delayed to mid-August. It may be virtual, not in public anymore. And just as a reminder, this is the way we used to select candidates before 1968. We used to basically pick people even if they didn't run in the race before, and then we started having riots at conventions. That's why we don't do this anymore. So this is very fraught with difficulty and divisions if you begin to replace your nominee ahead of the election, and the Democrats need to walk very, very carefully if this is the way they're going to do it. And that's why I think the vice president nominee will matter, because if they're forced to do that, that person will be the natural selection.
Thank you. Dan, you also mentioned earlier Biden and China.
Yeah.
Can you speak to the future of U.S.-China relations with either election outcome?
Yeah, so I think that's a great question, and the reason why I think that's a great question is the president came in, he started yelling at China. We basically had a trade fight with them. We had an agreement with them, and at times it was extremely uncomfortable. I think it hurt the economy for the Trump presidency by having that fight, but he got a good deal. And when we look at the deal that he got, if there was no coronavirus, the president would be in very good shape right now. Then what happens is you get this coronavirus, which the U.S. intelligence agencies firmly believe was created in China, not man-made, not genetically modified, but actually started in China. And it has really increased the tensions between the United States and China. In fact, that tension is now bipartisan in nature when we look at the polling data. And so Trump has had a dramatic impact in how Americans view China. And interestingly, China's economy is rising. They're going to, at some point, be the largest economy in the world. They have 1 billion people in population. And usually when you get into a scenario where the number one economy in the world is surpassed by the other country, it creates global tensions. We've only had it happen 16 times in world history. 12 of those times led to a war. We're not trying to have a war with China. I don't believe that China is trying to have a war with us, but that tension is there. And I can tell you that the coronavirus is enabling the U.S. to actually show that China is not a reliable partner. China withheld information in December about the coronavirus. They have actually shot down a drug that we know is having great success in treating coronavirus patients, the drug coming from Gilead. And basically the Trump administration are going around the world and saying, this country has caused trillions of dollars of damage and hundreds of thousands, if not millions of people dying because of their irresponsibility. And so I think the White House sees this as an event that showcased what they've been arguing for years, but this has kind of created that. So now that you have that framework, Hunter Biden's going to step in and be a foil for the Trump campaign in this race. The White House has really gone after Hunter Biden for his Ukraine business dealings. I'm sure most of you have seen that. They have held the China stuff for the general election. And what they're going to get into is that the vice president was using his office to help his son land business contracts, and his son is still on a number of Chinese company boards. I think it's going to be a major theme for the campaign, and it's going to have implications regardless of who gets elected, because it's going to force Biden into an anti-China posture, and that means that regardless of who wins, the genie is out of the bottle. The U.S. is now in a strategic competitor relationship with China, and those tensions are going to continue to rise regardless of which party wins the presidency. Do I believe that the Chinese would rather deal with Biden than Trump? I do. I've obviously watched Biden in the Senate. I believe that most Republicans like dealing with Joe Biden just because he is a deal maker. I'll give you a 40 if I get my 60, I'm in charge, or you get 35, I get 65. And he is a conciliatory person, and so, but I do think the U.S. policy towards China is in a permanent state of change ever since Trump became president.
Dan, thank you for that. Respecting your time, I've just got 2 more questions,
Sure.
and something that you have not discussed quite yet, but we did have a question about your concerns or worries about the growing budget deficit and debt.
Yep. I do. So as I mentioned before, that we have had a significant response in the fiscal stimulus side. We're providing about $2.2 trillion of fiscal policy this year, with more coming next year. Our budget deficit is going to be about $4 trillion this year. I can remember being up on Capitol Hill in 2002 and being told that the budget deficit was going to be $180 billion and being very upset over that. The idea that we would ever have a $4 trillion deficit is something that just blows my mind. However, I will caveat that with the 10-year Treasury being at 0.6 today, The rest of the world is not worried about where the U.S. budget deficit is. There's a deflation going on. There is a risk, a flight to safety, and there is a continuing funding of the U.S. budget deficit. This is a temporary problem. My opinion, it's going to be 3 to 6 months at most, and our economy is going to bounce back. I think America is going to be even better than it was before the coronavirus, and I think our economy is going to be strong regardless of who gets elected because it's giving us the ability to recover. We just have to make sure that that budget deficit begins to get under control. Let me give you one example. We're at $4 trillion this year. My expectation is we'll be at $3 trillion next year, right? So that progress is going to happen just by growth, just by the runoff of some of these programs. We have to make sure that these temporary programs to deal with a temporary economic dislocation are not made permanent. And I have to be honest with you, is that who gets elected will matter in the direction of which way those programs are going to go, or we will have to be able to finance that deficit in future years with things like value-added taxes and carbon taxes and other things that are going to stifle economic growth. So this is a real defining moment. But what I would argue is that, again, being in this business when we went through the global financial crisis in mid-March of 2009, I wrote a report about how you clean all that up after running up a $1 trillion deficit, and it was probably a little bit too early. The focus now is on the economic recovery, getting Americans back to work, getting Americans safe and healthy. And once we get that locked up, then we'll start focusing on how to fix the deficit and the debt.
Dan, last question, and thank you for that response. You mentioned taxes. Is there any realistic potential for tax relief in any future fiscal stimulus measures?
It's a great question. Yeah. So, look, we're in a divided government right now, and that makes optimal tax policy a lot more difficult to achieve. I believe that the White House is going to come out with a tax reform plan at some point that is going to move us to a 2 income tax structure bracket, 15% rate, maybe a 30% rate. Right now we have 5. If you look at the 2017 tax reform, we did corporate really well. We did individual very sloppy. And so I think there's an effort now on getting that individual tax reform in place. Obviously, having a $4 trillion deficit means that it's almost impossible to do this on a deficit finance basis. My expectation is that that White House tax reform plan will feature a couple of pay-fors. One will be a tax on endowments. One will be a tax on when very wealthy individuals transfer to a trust. And I think what they're focused on are people like Michael Bloomberg, George Soros, the Koch brothers, that have a certain level and then move that money into trust. So it won't be fraught with easiness. And that's a campaign plan designed to say, elect us, and this is where we're going to go. Joe Biden will have a similar plan. Joe Biden's plan is to raise those rates. He's really focused on 4 things: higher income tax rates, higher corporate tax rates, capital gains treated as ordinary income, and possibly an unrealized capital gains tax, which is gaining steam here. And the 4th is that he wants to get rid of what's called a step-up in basis in the estate tax and move it to a carryover basis on the estate tax, right? So that's his tax reform plan. And just as background, if you leave your estate to your children, they get the step-up in basis, and the basis resets on those assets. This would say, no, you got to pay the tax when you're unfortunate to die, and then we're going to still continue to tax your kids at that original basis. So it's a pretty big change. It's not one that's going to be on the front page of all the newspapers, but I just put that out there. As part of the stimulus package in which you asked, the White House clearly would love to have lower income tax rates as part of that deal. The Democrats would rather have an earned income tax credit be expanded. And I think that's what you're going to see in the House stimulus bill that's going to get released in the next couple of days. And so they can't agree. The White House has now come down and said, well, we'll take a payroll tax cut. The Democrats are still opposed to it. And so what do? We send people rebate checks in the mail as a compromise between the two parties. So I'm not hopeful that we're going to get a meaningful income tax reform through. At best, we may get a payroll tax cut as part of that process, but more likely we're going to see more rebate checks sent in that next stimulus package.
Great. Thank you, Dan, so much for your comments, as well, Aaron, for your time and for helping us, present this information today to our clients. For all those that dialed in, thank you again for joining us today. We hope you enjoyed the call and found it to be helpful. Please be reminded that we will be hosting another event with Dan Clifton leading up to the 2020 election in late October, and details will follow for your region. Again, thank you. Have a great day, and this will conclude our call.